Starting from a daily chart, today's Friday, last day of the week. There is non-farm payrolls at 8:30. There is the University of Michigan inflation expectations at 10 a.m. Okay, so relevant information for the day should provide one or the other should provide, in my opinion, a trading opportunity. On the daily chart, obviously order flow keeps on being bullish. Yesterday, Thursday, has found a rejection at the previous high. Above, not the previous high, but its previous high, okay, which was the high of Wednesday. Market ended up creating a divergence at these highs, which we'll look at on the lower time frames. Okay, so obviously this is an important premium array. This is the daily premium array that we currently have. We'll look at what's located inside of this wick on the lower time frames when we look at the hourly. And in terms of a discount array, okay, the closest one is I'm not sure how to mark up the suspension block at this point because there's two volume imbalances with a fair value gap in the middle. I guess, right, to not overcomplicate it. This being the discount array at these levels, okay, the fair value gap inside of the range. Okay, so discount array. I don't believe that. I mean, everything is possible, right? But personally, I don't believe that. Even if it does trade below the low of Wednesday, that it shouldn't go that far past it. Overall, the best case scenario for me would be something like this. Okay, whether this ends up as expansion or ends up failing inside of the wick, right? Some kind of consolidation. But overall, to support bullish order flow, I ideally wouldn't want to see too much of a displacement through this range, because if the market starts disrespecting bullish fair value gap, right? So far it has been holding every single one of them. That then Friday leaves some kind of large bearish range, right? Or leaves PDRAs of interest in case of an open high low close day. Then there could be an argument that next week might want to revisit the current monthly low that we have, okay, which is the first day of the month, right, Friday. Right, there could be an argument that price would want to do this. So anyway, discount array, okay, keeping these levels is obviously important. Seeing, I mean, if it even does trade into here, right, there's always the possibility that from these levels, right, price swept previous low and starts expanding from here. But if it were to trade around these quadrants, right, to see at what time is price trading around these quadrants and what's the reaction, is the lower time frame leaving fair value gaps or creating order blocks at these quadrants, or is price creating a market structure shift, creating divergences, all right, and whatnot. Okay, so discount array and premium array being the previous day's rejection block. On the 4-hour chart here we can see the weekly profile. If we were to measure the range, okay, well, this is the current weekly range. We can see that this is yesterday, having found that rejection at the highs. Price is at the moment consolidating around 25% of the weekly range. If we look at what's at 50% of the range, there's the low of Wednesday, okay, which has a volume imbalance. So in case of a bearish day today, I believe that this will be the drawn liquidity. Okay, either a kind of classic sell, right, small wick above the open, could even do this for all it matters. Okay, so low hanging fruit for shorts can be an important area of price. Okay, even if the profile of day will be bullish. Say price from the open here immediately starts to trade into it, and at a key time of day ends up rejecting. Okay, this can be enough narrative to send price. It doesn't have to be to make a new weekly high, but at least back in premium and maybe end the day around 25%, right? Create the open, low, high, close of the week. If we look now at a 3-day look back chart, first of all, we can see the previous profile here, which was a London close reversal profile. Price at these levels in the London close session, creating a divergence with the S&P at the London highs. Okay, and from there, displacing the range, right? Left a clear fair value gap through it. And this fair value gap is the PD array of interest for the day. Oops. Why? Because it's located at 50% of the previous range. Okay, and not only is it located at 50% of the previous range, but what we can see also is that there is a bearish order block and there is a bearish breaker at these levels. Right, this fair value gap cuts through these levels, so this is definitely the PD array of interest for the day. If price is really bearish, in my opinion, it doesn't need to come back. It could come back inside of it, but doesn't need to come and fully close it. Okay, because the PM session of yesterday found a rejection already at these levels, and from this rejection, price gapped lower. Right, there's a small gap lower at this range, which is the open of today. Obviously, this fair value gap can be used. Right, say today will be bearish. Obviously, can be used as an area for price to trade lower from. Ideally, this is accompanied by some kind of divergence. I would prefer seeing a divergence with the PM session high of the previous range, but this can also be an intraday, okay, session divergence. Okay, either between, say, 4-hour candles. Okay, say, I don't know, the 10 p.m. and the 2 a.m. 4-hour candle, right? Say that they will be bearish and London creates a high of day at these levels. Okay, so this is for the bearish scenario. In terms of a bullish scenario, right? Say price only dips a bit and then ends up trading through these levels. Well, then you would want to see price use this fair value gap as an inverse fair value gap. Okay, so this PD array is useful not only in terms of continuation, but also in terms of reversal, right? So as a means of inversion. We can see that yesterday's low came inside the range of interest for this profile, which was the order block located at 50% of what was the previous day's range yesterday, right? And you can see the chop into these levels, right? This is something that I was talking about inside of the outlook going into Thursday, was that even if the market were to reverse, okay, from a divergence on Thursday here, that most likely it would not come back, right, in one shot to the low of Wednesday, which is the most obvious discount target inside of the range. Why? Because this range, the range above of that volume imbalance, is high resistance, right? So very likely price would come back to these levels and, you know, either reverse or consolidate, right? This is the consolidation that follows an expansion. Okay, so far, in my opinion, there is more narrative to assume that price will be trading lower, okay, because price comes from an expansion to a consolidation, unless, obviously, the range of this PD array and of the overall dealing range that we're in on the hourly, okay, is respected. Right, and this would look something like this. Maybe price keeps chopping at these levels and eventually, okay, at a key time of day, sees an expansion lower that ends up being reversed. Right, if this is the scenario that's in play, right, you can keep these levels in your chart. These levels are so relevant because they're part of the 3-day look back. Right, and this level can be useful, right, as price is trading in discount, because this here is located in premium. right? For all it matters, if price is really bearish, okay, and you come inside New York and price is trading at these levels, and you still believe that the draw is lower, very likely, right, this order block will now become a breaker. Okay, so price will come back into its quadrants to revisit discounted prices. Okay, so discount area of interest, I'm still using the order block. Right, price is proving that there's high resistance at these levels. In fact, look at right how price is trading around it currently and in the PM session yesterday. Right, price finding a lot of resistance inside of this range, cannot yet create strong bodies through the quadrants of it, right? So simply wicks back up, wicks back down. Okay, so discount area of interest, if this area is invalidated and you still believe it's going to trade lower, you can use it as a bearish breaker. Or, okay, if price is trading at these levels and you're bullish, say because of a divergence, okay, with the drawn liquidity and discount, and structure breaks, you can also use this PD ray as a means of a reclaimed order block, okay, and see how time trades around the quadrants, right? And from there, as a low-hanging fruit, you would have the premium fair value gap from the pre-Z's range to target. This day is obviously a bit trickier than all of the previous days. I feel like analyzing, right, every single previous day before this one was easier because price was always leaving key discount array and using them to trade higher from, right, on the bullish side, creating open low high close profiles from it. But obviously now the context is different, context being the week is classic buy. Thursday has potentially formed the high of week. Okay, this is a good enough candidate to be the high of week if today creates a bearish profile. Obviously, why? Because it's Thursday, and because has a divergence. It has a divergence between session liquidity followed by a market structure shift, a fair value gap, right, a bearish breaker, bearish order block. And so, if we want to trade long from these levels and the way that the market opened so far, right, through a gap down, I don't know how likely it is, right, that the market will start doing this directly from the open, and that the low of the day is already in, right? I expect, because of the expansion followed by consolidation, that the market will want to do at least one push lower. And now, where could that be into? It could be into, okay, the range of the order block, right, inside of the wicks of the intermediate term low, which is the current dealing range. There's a fair value gap also at these levels. Right, this fair value gap cuts through a mitigation block, cuts through a bullish order block. Okay, so this range here, if price is bullish, could be enough to send prices higher. Right, this being sell side liquidity, which is the most obvious discounted level inside of the range in case of a bearish profile. So keep these two levels on your chart, right? See how price moves around them. Okay, this being a discount array, this being a premium array. Both of these, in my opinion, should be important. Okay, again, both of them can be used either to trade continuation from, or can be used the order block as a reclaimed, right, and the fair value gap as an inverse. Maybe we can put up some standard deviations also to map out this move, right? If we take, so this candle here, this hourly candle is the 9 a.m. 1 hour candle. At these levels, price had a shakeout. Okay, why did it have a shakeout? Because it created a divergence below the pre-market lows, or the London close range. right? And so this was the final shakeout before the move higher that then ended up failing. So we can put some standard deviations from these levels, right? And you can see that so far the market is trading at negative 0.5 standard deviation of this protraction. Again, there's that fair value gap, there's the breaker, there's the order block, right? And you can see 1 to 1.5, okay, located at the range that I was just talking about, being the intermediate term low, being the fair value gap, being the mitigation block, right? And overall, the first drawn liquidity that there is the volume imbalance, the new day opening gap of Wednesday. Now, terminus of this would be this, around the range of this is the new week opening gap. Personally, I don't believe that it will come back down there. I think this is too much of a range. Well, I mean, everything's possible, right? It's NFP. Could the market tank 3,000 ticks? Sure, everything's possible, but if I were to assume that it's going to do this, I'll probably get it right, 1 times out of 1,000, right? I think it's more likely that even if today is a bearish day, might trade towards these levels and then create some kind of consolidation. I don't think there's enough narrative to assume that out of nowhere now the market's going to start tanking 3,000-4,000 ticks in one day. Okay, so these are relevant standard deviations. If, right, coming inside New York, you see that the profile is still bearish, right, you want to see the reaction around these levels. And coming inside New York is going to be important to see what did non-farm payrolls do, okay? What did London and the Asia session do? Right, you come inside New York and price did this, right? And then you see NFP spiked below and the opening range starts to create a reversal. Okay, very likely at this point, right? Low hanging fruit, you have the new day opening gap, and then you would have the breaker here, right? The low of the breaker, the fair value gap, the order block, range of confluence of premium arrays. Okay, so again, premium array, discount array, right? See how price trades at these quadrants. At what times does it trade at the quadrants? What does it do inside of the quadrants? Does it break structure? Does it create fair value gaps? Does it create divergences? And take it from there.